This is your LMAX exchange technical update for Thursday, August 11th, 2016. Euro dollar. So the real euro has rallied up in recent trade but remains well capped below the 100-day moving average for now. While the market holds below the 100-day moving average, the pressure should remain on the downside in favor of another topside failure and fresh move back down towards key support, which comes in at 109.12. Only a daily close above the 100-day moving average will compromise this current bearish outlook. Sterling dollar. So cable remains pressure to the downside, with the market recently taking out some internal range support around 130.55, with this now putting the pressure back towards the recent plus 30-year low that was set back on July 6, just under 128. At this point, rally should be very well capped, and ultimately only back above 33.72 would compromise the bearish outlook. Dollar yen. Dollar yen corrections have stalled out, and the market continues to be focused on the downside, with the market looking to break down below recent support, which came in from the 2nd of August around 168, which would open the door for a fresh downside extension towards a retest of the 2016 and multi-month low at 98.99. At this point, only back above recent highs at 102.66 would take the immediate pressure off the downside. Euro Swiss. Euro Swiss clearly remains confined to a range-bound trade, with rallies towards 109.45 well capped, while dips down towards 107.78 are supported. At this point, a break on either side will be required for clear directional insight. Aussie dollar. So Aussie has rallied up to key internal resistance, and although the market has taken out the 77 barrier, you can see here that it's been unable to establish a daily close above 77. Looking back, we have resistance from this going back to March of 2016, and then again in early April 2016, and then back into June of 2016 and July of 2016. Rallies up towards this level have stalled out. So while we hold below 77 on a close basis, there's risk for another topside failure. Only back above the 2016 high at 78.35 would compromise this outlook. Dollar CAD. So dollar CAD continues to show signs of a major base, with the market recently taking out key resistance at 131.89. This sets the stage for the next major upside extension towards the 135 to 140 area. Any setback should be very well supported, with only a breakback below 28.62 to compromise the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has seen a rally up in recent trade up above 72.50, although the market continues here to show signs of good internal support ahead of 73.25, the 2016 high. Look for another topside failure up here in favor of the next downside extension back towards key support at 69.52. SPX 500. The S&P 500 has recently rallied up to a fresh record high, but is showing signs of potentially stalling out. We will need to see a break below 21.47, however, to take the immediate pressure off the top side and open the door for a potential acceleration to the downside. Gold. So gold has been consolidating in recent trade, though ultimately the structure here is highly constructive, and any setback should be well supported ahead of 1300 in favor of the next major upside extension towards a measured move objective at 1400.